Live streaming today, so let's get a quick audio and video check in our live stream. Should also be good to go. All right. Happy Monday, everybody. All right, how about we try the audio in the live stream again? Should be good to go. All right. Okay, so basically what we're looking at to kick off the morning, what we're doing to kick off the morning is looking at our anchored volume weighted average price, looking at the structure of the market, which takes us down to the indicator at the very bottom of my chart, which is down in here. And I want markets that have been mostly double green. Notice RTY would not meet the criteria. Let's contrast YM to RTY. Notice the bottom here. This is far better, clearer structure. Far better. So while all four of these are above the VWAPs, the Dow has better structure in terms of those moving averages. Let's take a look at the S&P above the VWAP, above the VWAP. And generally speaking, it went sideways not that long ago. It did go sideways not all that long ago. But you'll notice before that, double green, double green. Lorna, do I need to refresh the room in the futures, or you got it's under control? No? Oh, okay, cool. No, I'll just grab it again. Hang on. I'll just grab it again. Just bear with me. Okay. Just did a fresh screen share in the futures room, and it looks like everyone in the YouTube room is good. All right. So again, it's not enough to be above the VWAPs. Okay. It's not enough to be above the VWAPs. You really want to look at the structure, the history also. And you might say, well, this is what a day trader needs to know. This is what a day trader needs to know. I do believe that the idea of day trading is to still be very much in tune with the path of least resistance on a daily time frame, which is the most psychologically significant time frame of any, right? There's no time frame that's more important than the daily. I'd say maybe the weekly might come, after that, but this notion that the broader markets are focused on a 1 hour or a 1 minute chart in terms of that overarching, more accepted psychology is just wrong. The daily is going to be the end of day or daily time frame is going to be the one that influences the broadest opinion about what a market is doing. And I think for an intraday trader, it behooves us to know what that is. Crude oil is just barely getting bullish again. So I like the crude oil to the upside. Those of you that are in both the futures room and the Sector Secrets Mastery, we've been trading this, whether that be via the oil stocks or in the futures room. I've been saying, hey, straight up, just get long RBOB and crude. Now, here's an interesting juxtaposition. RBOB. We're not quite bullish on the daily in terms of that directional bias, but look at how long this market's been double green. Look at the trajectory of price. So this is where, we might be flirting with the VWAP, which makes intraday trading a little bit more difficult, but there's no doubt that I'm still going to be thinking about the dips to buy in RBOB, which means that's going to influence the stocks that I'm trading as well and the sectors that I'm focused on. What about something like the Australian dollar? I'd be a little cautious on the Aussie. While I have been day trading this, I'd be cautious on the Aussie for the same reason I'd advocate being cautious on the Russell. It's been sideways for a really long time. If you want to day trade a currency, let it be the 6C, let it be the Canadian dollar. Far better bullish structure. All right. So again, determining what will give us cleaner setups based on the daily. We haven't even looked at the 1 minute yet. So here we go. The daily time frame is set. All right. And I'm just going to give you all a quick heads up. I'm trading live right now. This is what I'm setting up trades. And so most of my commentary for about the next hour to hour and 15 is going to be solely on what is it that I'm seeing right now and what I want to do. And then I will write those in the notes as we go along. After about 10:45, if you have questions that are, hey, what's that indicator or things like that, I'll be happy to do that then. We're going to prioritize the actual analysis and trades now. And I'm happy to sort of take it a little bit slower and talk about some of the questions more of the educational variety after 10:45. Okay. All right. So just so everyone knows, I'm not ignoring the questions, but the priority is getting the live analysis and the trades out. All right. Thank you so much. Okay. So moving on, got some nice directional buys sorted out. I've been looking at the 6A, but I'm going to actually change that to the 6C. And by the way, it makes a lot of sense for a lot of traders to think about where even some currencies might give them opportunity in the day trading that they're doing. I think just reducing your day trading to what's happening in the indices is just a tiny little world that you're going to miss some really great opportunities if you were to do that. So I would love for everyone to just be open to whatever is really what's tethered to the bell. In other words, what markets, when we're day trading, what markets are going to move with the indices. So notice I'm not talking about corn. I'm talking about the Canadian dollar. So crude oil is going to move with indices. Canadian dollar is going to move with indices. The VIX is going to move, of course, with indices, but not sugar, right? Certain sector ETFs are going to move with the indices. So that's where, I'm going to place a lot of my attention. The markets that are most likely to move together. All right. So also notice that as soon as the bell rings, it's not, look, we're not Pavlov's dog. Don't take a Pavlov's dog approach as someone rung a bell so you start drooling, for sure. And by the way, you know, one thing for those of you that are new, either in our live stream clearly, and also new to what I'm doing here in the futures room, you know, there's a lot of content in the members area. We have a learning center. The free and premium videos are there also to keep you going along. But if you want another asset in your education with what I'm doing, and this would probably apply to the folks in the live stream even a little bit more, unless you're a member, is check out countdowntrader.com for some of these things about, for example, our most recent update over at Countdown regarding that process that I was just walking you all through, anchored VWAPs, right? We have 2 updates there on the anchored VWAPs over at Countdown Traders. That's something you can check out after our live stream. So there's plenty of resources for members and non-members alike, okay? All right, so back on over to what we want to do. So again, what markets are going to move with the indices? Notice that's what I'm looking at, not disconnected, not disconnected. All right, the other thing that we're going to be looking for, the first 2 pitches of the morning. The first 2, as I like to say, pitches of the morning. B-score. And I'm going to focus on lows because we have bullish directional bias. Right? So because of the bullish directional bias. And HPMR. Lows. So I'm focused on the long side of this market. I'm looking at those exhaustion support levels from which to get long. All right. That's what we're focused on there. Those exhaustion support levels from which I would prefer to get long. Let's see what else we have here. Just bear with me 1 moment. Okay. All right. So then if you're just starting off as a day trader, I really, really do recommend being a one-way trader. In fact, I've been doing this actively since the mid-90s, and I'm still predominantly a one-way trader. There are very brief and infrequent, typically, moments where two-way trading, what does that mean? Long, being open to long and short in the same session. Those are quite rare for me. I find that dizzying for the most part because the mental transmissions of our brain do not like that flip-flop. Brains like to compartmentalize things and work within that understanding. Why not work with the way we're wired? Compartmentalize. In other words, categorize what the market is, bullish or bearish, and go with that psychology. You're going to find far better success, especially in the early days, years of your day trading by doing that. And then eventually you might find, you know what, I'm comfortable starting to look at trades going in both directions. But in the beginning, I would not advocate it. It's going to lead you to overtrade. It's going to, you're going to develop all the bad habits that are going to persist, and you're going to have to unlearn. And it's also going to keep you from trading too frequently, which is oftentimes what happens to traders once they've given themselves license to day trade. They are going to succumb to the dopamine addiction of that new trade, the next trade, and overtrading. Please don't go there. It's a hard thing to break, that dopamine addiction. They tested they tested rats. Of course, we do everything to rats and mice, right? Some rodent, some poor rodent, was given the option to eat, procreate, or just get a dopamine hit. They pretty much stopped eating and stopped wanting to procreate just for the dopamine. And so Silicon Valley knows this, and so do brokers. The more they can encourage you to trade, the more they make money. They don't care if you lose or not, right? I care. I care if I lose or not. I care if you lose or not. The thing to remember is the slippery slope of market orders is a very, very difficult one to break. And market orders are pretty much the surest path to overtrading. All right, so keep that in mind. All right, next up is, what do we have on our 1 minute or 5 minute? I'm looking at both time frames. I don't have anything near the V-score low yet. I've got nothing near the HPMR, which brings me to another point that a lot of traders somehow often tend to find out the hard way, which is you don't have to do anything in the first 30 minutes. The first 30 minutes of the market are known as the clearing, from 9:30 to 10 a.m. Eastern. First 30 minutes of the morning are known as the clearing. Some people call it the opening range too, but it's the clearing. And this is where a lot of the trades are, well, as the name suggests, cleared. The volatility is higher between 9:30 and 10, and it is not necessarily indicative of the general direction of the morning. So any trade that occurs, that sets up from 9:30 to 10 a.m., consider aggressive. Considered aggressive. Aggressive trades should be taken with options, either the index or the ETF alternative. They should be taken with smaller size, right? And you really do need to remember that it's just not a bad time to trade. It's just a volatile time to trade. So keep that in mind. Not that volatility is bad. It's just going to change the risk profile of your setup. And there's nothing wrong with higher risk if you've position size in a way that you can handle it, or you're using the kind of options that will allow you to sort of dilute that risk. Okay, so Dow is starting to head lower. Let's go take a look at the YM. Anything we do between now and 10, another 20 minutes, is going to be aggro. So as we get closer and closer to the low of the morning, I'm looking at the very lowest point that the V-score has made since 7 a.m. Eastern. So between 7 and 9:30, I'm monitoring the V-score, which is the standard deviation of the VWAP, the Z-score. And if we go down to tag that level, that is oftentimes a great fatigue support level, as is the HPMR, which is a tool that I created. It's a process, really, that I created, a calculation using historical volatility and creating volatility-based support and resistance in accordance with the time of day. Very different tool, really powerful tool, and you'll see those zones highlighted in red and green on my chart. Okay, so we're measuring volume, now we're measuring volatility, and I'm trying to find a low that I can buy. So the Dow is looking pretty interesting in terms of a V-score. So at 940, or is it 941 right now? 941 Eastern. 941 Eastern. The June Dow is heading lower towards the V-score buy trigger, just the lower end of it. So the closer it gets to it, the more I'll be willing to look at it as a potential buy. And it seems to be hovering just above the second standard deviation of the volume weighted average price. Unfortunately, we don't have the HPMR anywhere nearby. So in other words, the likelihood of my getting down to the volatility exhaustion simultaneously with the volume exhaustion is pretty much nil, which is okay. So the closer we get down to this level, when this cyan line touches this dotted white line, that's going to be a volume exhaustion. Not there yet. What is in fuego right now? The NAS. The NAS is moving higher, really unflinchingly, since pretty much the bell. All right, and right at 9:31, and some of you might have noticed this, pretty much right with the bell, this candle right here tagged our HPMR. So that's a tough trade, but it's not one you don't see. It's not like you can't see it coming necessarily, but it is difficult. But for those of you that are trying to visualize what an HPMR being hit would look like, that's what it looks like. Just hits this zone of volatility-based support. And that is a dynamic zone, by the way. These are not fixed. It's a dynamic zone because it's responding to volatility. All right, so then we move on to, let's see. Bear with me here. What else is moving? Nothing else right now is really capturing my attention as much as the Dow is at the moment. So again, don't feel the need to have to put on a trade between now and 10. It looks like we're very likely going to see some breach retreats in the NQ and ES. So stay patient during the clearing. You don't get brownie points for putting a trade off early in the morning, unless there's a setup, right? And it looks like we will see NQ and ES breach the upper end. You never know. Don't front run the setup of the clearing range and set up breach retreats. We'll cross that bridge when we get to it. The markets have to cross the highs, and then we'll get there. But stay patient. There are some more pitches that we can take advantage of. So after 10 a.m., I add, not remove. It doesn't supplant them. It's an addition. So it supplements to the HPMR and V score. I add two more pitches, and that is the breach retreat and the 34 EMA wave pullback. At this point in the morning, I'll have the V-score, HPMR, which is valid from 9:30. After 10 a.m., I could look for breach retreats and 34 EMA wave pullbacks. Again, there are certain criteria that have to be met, but I can add two more setups to the approach after 10. All right. So then that takes me to let's see, what's the Canadian dollar up to? Not a whole heck of a lot. Crude oil, not too much. VIX is heading lower. And Dow is very choppy right now. And NAS continues to head higher. Now, if you're a momentum trader, and I am not, I think it's very important for whoever's on this side of the mic to really be clear in what they're willing to trade and not trade. Yes, the NAS is going higher, but I'm just not simply going to buy it because it is. Some traders will feel comfortable doing that, and that's fine. Typically, engaging a momentum market is not my thing. Now, if you are a fan of that, something wrong with that. I just want to mention that if and when you are going to take some sort of momentum play, it is very important that you use time and volume. So these are things that, whether you're a submarket sonar type trader, which is volume, whether you're using other simpler tools like a 10x candle and the what does John call those? Conviction dots. Whether you're or volume strength, whether you're using volume profile, the way that I teach you guys with the submarket sonar, If you are going to play momentum, you've got to look at those volume ledges, those thresholds that if and when crossed do tend to indicate that the market can keep going. Now, my preference for pullback trading does two things. One, it's easier to plan trades out well in advance. Volume trades are usually very quick. You might see where the market could, for example, 13,515 volume ledge, 13,507 volume ledge, 13,574 volume ledge. So the markets are going to respond to those. Now, using volume in this way, not difficult. It's actually ridiculously easy. And it's a sub-market sonar view. So sans all these volume ledges, you really wouldn't know that the market could accelerate or stall at a certain, it doesn't really make it super clear why it would stall here. Now, if you're a fan of psychological levels, you'll say, well, 13,580 is a minor psychological level. 13,5 is a major psychological level. But you can get a lot more granular about where that size is when you can throw these volume ledges on your chart. Okay, and this is just volume profile, gang. This is not complicated at all. It's just looking at support and resistance from another point of view, from the point of view of volume. And then the way that we can even simplify that a little bit more is you'll see on my chart, there are these horizontal lines here, and they're moving because they're responding to volume. Here is your point of control. Here's your value area high. Here's your value area low. This accounts for 70% of the current volume that we've seen since 9:30. This is the most volume that we've seen since 9:30. All right. Okay. So that's where we sit right now. I am pretty excited about the prospect of the breach retreat. And by the way, for those of you that are noticing, for example, on the NASDAQ, we've gone double green. I don't want to buy pullbacks to the wave until after we get a breach. And I won't know that at least until 10 o'clock. So can you throw volume ledges on TradeStation? No, you cannot. The reason that you see me jumping on over to the likes of TradingView to pull up different volume tools, as many of you know that I do, the reason you see me do that is because you can hook your TradeStation account, right, to, let me show you here. You can hook your TradeStation account data feed into TradingView, and then, especially for futures, you're going to have to, unless you want to pay for that data through TradingView, which, most futures brokers are going to comp at least a CME, CBOT, some of the major brokerages. They'll comp that data through your account, and then you can use that feed. And again, you can see the different companies that they work with. And if you have an account with one of them, then yeah, you could feed your TradingView. This is a pretty popular one. Clearly, TradeStation's been around forever. I also hook up my crypto, my Forex trading. I actually have an Alpaca account that I'll buy stock through. So Awanda as well. So there's a lot here. So if your broker's here, that means you can hook up the data feed. And you can trade through the platform, which I don't actually do, but you can trade through the platform. So yeah, that's where I'll hook up the different tools that I've either found, created, whatever, through TradingView. TradeStation doesn't do it, and I actually do not like the version that Toss has. So I'll just go to TradingView. All right, next up is, where are we on the Dow? Not quite there yet. Still plenty of the morning left. Still got to get down in here, just in front of this -2 standard deviation. Crude's pretty strong today, which I'm very happy about. And, in terms of different energy trades, longer term, whether you're in the futures room or the sector secrets, we've been looking at natural gas as well. So we're still in the process of building that trade, that natural gas trade. So I think we've found ourselves down near the lower end of the range, which is great, which is fine with me. And so, I'm going to continue to build that position via the 10 strike for the UNG. I do not play the underlying futures contract when it comes to natural gas. So it's sinking into the wave in a double green. I do like that. So that is not a day trade, but rather a longer term swing, trend following swing that I look forward to having for days, if not, weeks. So we'll see what happens with that. We'll see what happens there. Let's see. What else do we have here? Nothing else yet. So what I'm waiting for now is 10 o'clock, 6 more minutes, and then we'll have our clearing range set. So the other thing that I do need to make note of, especially with the NQ and the ES, which are more likely to have the breach retreat, is I want to be clear on the range. Where are we with the current range compared to the historical? Right? So we have almost 90 points, 90 NQ points thus far in the morning. And I'm going to compare that. Here we go. I'm going to compare that to what we typically see between 9 and 10 a.m. every morning. So the column that I'm focused on here is this one right here. And I'd like to see, minimum 65 and usually somewhere around 85. And clearly with almost 90, we're good. This is within the average, easily within the average type movement that we'll see in the NAS. This is important because if a market is moving abnormally in terms of its historical price movement range, the stop loss placement, targets, the volatility is less predictable. You want to see that the volatility ranges have fallen into what we usually see. All right, so then we move it on over to the S&P. And again, same column, the one that also reflects what's happening between 9:30 and 10. And the average is going to be right there around 16 and change. Now, the S&P is a little tricky. While the NAS is pretty normal, right now, our movement in the S&P is closer to 10. So it's way lower. It's not even on sort of the bar, if you will. So stop loss placement on the S&P is going to be tricky. Stop loss placement on the S&P is going to be tricky. And this is where we'll probably say thanks, but no thanks to the S&P for now, because the S&P looks like it's moving a little bit more in sympathy with the Dow, or it's caught up in the very common tug of war between the Dow and the NASDAQ. Well, the Dow has 74 points. Why is the S&P so quiet? Take a look. Because the Dow is trading in a very narrow range, right about here, 74, 75 points. We are nowhere near the normal range for the Dow. And that, as you can see, is also influencing what we're seeing in the S&P. So your Dow is very low, and that narrow range is influencing the S&P, which is actually quite low. So now you know, okay, the S&P it's moving directionally with the NASDAQ, but in terms of volatility, it's definitely being stifled a little bit by the Dow. So be a little cautious with the S&P. Doesn't mean you can't trade it, just means you need to be a little bit more cautious. All right. So with that being said, in terms of now the overall ranges, I like the S&P. I'm going to be cautious. I like the NAS very much. It's acting normally. And I like the Dow a lot. I wish it gave us a V-score low buy, but it too perhaps could give us a breach retreat. But if the Dow were to get breach, I've got to be very aware of the fact that if it suddenly expands to what it's capable of doing, again, remember, what are we concerned about? It's sort of quiet, but what if it suddenly behaves more along the lines of what it typically does? It's going to suddenly increase volatility that might be beyond what the risk tolerances were suggesting with this rather truncated 74 points. And all of a sudden, if it moves up into what it normally could and quite frankly should do, all of a sudden, if I'm calibrated to 74 points in terms of placing my stop, and it goes to the more 110, I'm using the wrong measuring stick. Or at least my measuring stick will not be able to compensate for the larger, in this case, more normal range. This is where a lot of traders get bit by tight stops in sort of narrow markets because they don't have the knowledge to say, oh, this is narrow and this could easily expand 45 more points. All right, 35 to 45 more points beyond what we're seeing right now at this 74 level. So direction-wise, I don't have any doubts. It's placing the stop if and when we get the buy and compensating for the quiet market is where I need to be a little bit more aware. And it's these things that we don't see but are very real influences on the market that tend to be the things that bite us. What else is one of those things? The calendar. I mentioned we had Bostic this morning at 9 a.m. We've got, we had Bostic at noon. We just had, I don't know, which Fed members was talking already? Brainerd. We had Brainerd at 9, and then we've got Bostic at noon. All right. Well, and this week is peppered with sort of these random, as you can see here, all these different random FOMC events. We have Quarles tomorrow, as you can see here, and Evans. We have Quarles again on Wednesday because one's just apparently, oh gosh, Quarles, look at Quarles making the tour like a Miss America. Look at that. Quarles on Tuesday, Quarles twice on Wednesday because apparently we just can't get enough of Quarles. Holy cow. So heads up for those events because the market will oftentimes lately sell off before their speaking engagements. Okay, next is, it's 10 o'clock. Great. Now we're going to wait for our breaches, and we're getting them right now so we can start setting up our breach retreats. Let's do it. We're going to prioritize the NQ. Then we'll look at perhaps XLK, XLY, XLC. Then we'll go ahead and take a look at the ES. But right now, the Canadian dollar has breached higher, by the way. Don't want to neglect my love of currencies. Currency day trading alongside index day trading is very nice. RTY, by the way, my Russell fans, RTY has breached. S&P has breached. NASDAQ has breached. Dow has breached. This is clearly overall risk appetite this morning. Everything's in sync. This is a nice morning in terms of structure. Very nice morning in terms of structure. So great. Okay, so once we breach through the highs, which we have on the 1 minute, and you'll see the 5 is poked up higher through the clearing range. It just won't signal the breach until this candle is closed. But I mean, clearly we can see it traded above the range. So there we go. So what I want to do is start setting up the day trades. Now, you don't have to trade this via futures, minis. You can trade it through micros. You can trade it through the ETF alternative options. So, that part of it, sort of your choose your own adventure. So my day trade buy of the June NASDAQ, which is the NQM21 contract. This is a breach retreat setup. So you know what kind of setup we're talking about. And that means my aggro is going to start at about 13,550. You can even make it at 553 to step out in front of the major psychological level. Anything that's an aggro limit buy is in turn a trigger for the option. So while I will buy the June NASDAQ at 13,553, it is for many traders going to be better suited as an option long position in maybe the QQQ or a micro NQ. The trigger is the same regardless of how you want to engage the market. All right, moderate is going to bring me down to 13.5. I'm going to go with 525 on that. A little bit lower, and I'll show you why in just a moment, because I want to be able to compensate for the fact that we have the clearing range low plus the HPMR. So I'm going to make my conservative down around 13,487, which will allow me to move my stop a little bit lower to compensate for the volatility, which is the stop loss at 13,475. So the range is fairly wide here. It is fairly wide, but I do like this setup. It accounts for a lot of the different support levels that I can use. And my first target is going to be a 13,578 limit order to sell. Notice I'm using all conditional orders, not a market order to be seen. All right, so that's the NAS. And if the NAS starts pulling back, well, then so too will the S&P. And if the Dow starts pulling back, so too will the S&P. So the S&P is going to be influenced by both the NASDAQ and the S&P. So what I'm going to do is I'm just going to go focus on that June Dow for a breach retreat. We've taken out the high of the clearing range, and now we're starting to pull back. I like that breach retreat. So let me show you what it looked like on the Dow. We did pull back some on the Dow, but not enough for me to really love the entry, because I want to be somewhere closer to 34,310 on either my DIA calls, my micro YM, or my mini, which is typically what I'm going to focus on, the mini. The next level I'm going to focus on in the Dow is going to be the moderate level of 13,285. Now, some part of your brain's probably going, wait a minute, Rog, this thing's moving higher. It's never going to come back. Never say never, because right about the time everybody thinks the markets are just off to the races, markets love to come back and correct right about the time nobody thinks they will. And my entire trading life has been dependent on the kindness of a pullback, and I'm fine with that. Markets do tend to ebb and flow. I'm just focusing on the ebb. Some traders love the flow. I like the ebb. There's no right or wrong. Some traders like vanilla ice cream. Others like chocolate. I like vanilla, right? So there's no right or wrong here. The quicker you let go of this notion of right or wrong, the happier you're going to be in terms of, what you're supposed to do in the market. Someone asked me this morning about, and I love the question about what I thought about Kathy Wood and my current reflation trade and her take on deflation. I said, look, she's usually got a 5-year time horizon. It's apples and pineapples, right? So same thing with momentum and pullback trading, just apples and pineapples. Choose your fruit. Well, that's it. Okay, our stop loss for the Dow is going to be below the clearing range. And, I could put some, part of me is going to think, gosh, I'd love to be below 250. I'll just go ahead and go with a 34,260. If I need to move it, see, it kills me to have something so close to the major psychological level. We'll deal with it. I don't like to move levels. I will seldom move levels around. I find that to be very difficult, borderline deceptive, and just how convenient, right? I'll move stops in mid-flow. I don't like to do that. Have a good plan, follow the plan, and it makes it easier for you guys to follow too, right? So unless there's a significant shift in the volume levels, there's a significant shift where I say we're going to have an edge, then maybe I'll move a target or I'll move a stop. But for the most part, those of you that have been with me for months, if not years, you know that I am not going to be that flip about doing that. All right, my first target is going to be the 34,330. 34, 3/3, that's the value area high, which, by the way, value area highs will move. So there's a situation where you might see that I move the target because if the value area high goes higher or lower, I'll adapt to that. I'll adapt to that. So I'm not rigid, but I will adapt to what I see, but I'm just not going to be really twitchy about adapting. There's a slippery slope that a lot of traders will start to head down if their levels are too malleable, because then you don't have a plan at all, quite frankly. You don't have a plan at all. So, and you can see we have some nice volume ledges here around 311, 310. And if you notice, that's one of the levels that we're waiting for the market to come back down to. So, no, on one hand, these volume levels have a certain gravitational pull, so a magnetic quality. And on the other hand, that magnetic quality is usually also met with exhaustive, in this case, support. So I need that market to pull back. Again, I want to be long. So if nothing else, I want to be long. You know my levels. And if you want to be more aggressive than I am being, no problem. But at least if we're heading in the same direction, let's say you want to, if you're comfortable with a shallower retracement, some of you might say, Rog, what about this nice 34,320? Sure, if you want to go with 34,320, that's 10 points higher than the aggro that I put out there. So if you're comfortable with 10 extra points of risk, 10 less points of reward, and you're thinking that I can manage that with a DIA call. All right, so what would that look like? What would that look like? So let's say, for example, you want to put in, and this is not a bad idea. I'll go ahead and outline it here. Let's say you want to go ahead and day trade the 28 May DIA, and this would be a 343. I think you're looking at a 343 call. A lot of volume and open interest there. Gotta love that nice liquid level. 343 call, which, by the way, is trading for the whopping price of $270, $2.72 right now. So on a pullback, it'll be even less. So what you'd be looking at is to day trade that 343 call for May 28 with the the singular trigger being 34,320. Now hold on, 34,320 in what? In the June YM, in the June Dow. So that same Dow trade that I'm setting up for the micro that would influence the mini, I'm going to also set up, in the mini that would influence the micro, is also the mini YM that would influence the timing of the entry for the DIA call. So notice I'm not having to look at micro and mini and DIA. I can just look at the YM and know that 34,320 could be a very aggressive micro entry. It could clearly be a point at which I start bidding, say, 250, 255 for the even 260, which is where the trades are going off right now. In the DIA May 28 343 strike, right? There's a lot I can do in that area. And as the markets are selling off down there, you can try to get a fill at 255, 260, split the bid offer, which is 255 by 268 right now. I don't think it's out of the question to get a 260 or 255, something in there. You can probably work the bid ask. Again, it's 255 by 267 right now on that. Now, I'm not that interested in buying the YM here. I need 10 more points. But DIA calls are kind of interesting, and I can control risk. So, for example, 28 May, DIA 343 is right now trading at about 260. Trading at 260. That was a fairly easy fill. That's where the last trades were going on. So $260 is the cost, and 25% of that premium, of that cost, is the risk. Simple market money math. For me, that's what I'll focus on. That 310 level, well, I like that 310 level. It's a 38.2% retracement of the clearing range high-low. Now, notice also Dow is a laggard right now. So since Dow is a laggard, June Dow, so laggard, and NQ, NASDAQ, is the leader so far. ES could be a good alternative, and that means SPY2, to the YM. S&P could be a good alternative to the Dow, whether that be DIA. I like them all. I think I think all of that would work. So let's build the ES then. The ES is probably going to be relegated to a retest and a 21 exponential. This is aggro, but I would go with the SPY. So this is the way this would work. Day trade, 28 May. Now we're moving on to SPY or micro. I'm not super in that, and I'm not saying this because I want you to emulate this. I'm saying this because it just sort of is habit, is I tend to just go to the option alternative. Now, let me mention something about futures. Tax advantage with futures trading is far better than options, far better than stock and ETF options. So that's definitely something that could influence why you choose one over the other. So micro is perfectly valid. Anywhere that I'm taking the, anywhere where I'm taking the SPY, you could clearly take the micro S&P. I'm less interested in telling you, trade this contract, and more so than you understanding when and why you want to at least ask yourself the question. So you could day trade the 28 May SPY. By the way, if you want to play SPX instead of SPY, I don't usually play the SPX, but you could, right? These are not things that, this is the only way to do it. It's just not true. Now I'll go with the 28 May. Some of you might notice we have a 26 May. You could play 26 too. That's going to cost you a little bit less. You do have the Monday, Wednesday, Friday. Will I play the 24th? I guess you could play the 24th as well, right? 24th or 26th is perfectly fine. But let's get the strike right. And what you'll be focusing on is a market coming back down to 41.85 on the S&P. 41.85 on the S&P. And that is then going to translate to basically a 418 call. So the 418 call has the trigger of 41.85, and I think it's a quarter on the June S&P. That's what I'm watching. So I don't have to watch the SPY. I can just keep an eye on the ES and know that as the ES gets closer and closer to basically 41.85 and a quarter, I'm going to bid on those 418, May 24 or May 26. It really doesn't matter to me. I'm going to bid on those calls. We're going to close this trade out before 4 p.m., usually about 3:50 p.m. And so if you're playing the micros, I don't actually look at the micro chart. When the S&P gets to 41.85 and a quarter, then pull up, the MES, and buy that then. So those are the alternatives. I don't keep an eye on the alternatives because now you're having to watch a lot. Watch one market and then ask yourself, well, what could be the spinoff? What could be the alternative? When that market gets to a certain price, I can buy the S&P mini, which is what I'll do normally. But if you want to go micro option, there it is. It's the same trigger, and it keeps you from having to watch so much. It keeps it nice and streamlined. So again, the trigger for the 418 is going to be the S&P futures contract, 41.85. All right. Now, the Dow having made a low at 10, we did get the 10 low on the Dow. So most of you right now at 1017, having made the 34, 310 low in YMM21, the DIA calls, micro YM and mini YM and or mini YM are now long open, right? Open long trades. So let's talk about the management, because it's not a winner until you pay yourself. Not a winner until you pay yourself. So let's go back to 34,330. I know that's not, look, I'm not getting out of bed for 20 Dow points. I'm not ever going to be getting out of bed for 20 Dow points. However, this gets us on the board, right? So my rule, and it is kind of a rule. It's not a suggestion. This is kind of a rule. It's a limit order sell of 50% of the position. I don't care if it's a DIA position. I don't care if it's a micro position. It doesn't matter if it's the YM position. You take 50% of your position off the table, so you do your main job, which is to pay yourself. Pay yourself. Okay? Which is, one of the things that when think about this. If you are trading one contract, and please don't, there are too many ways now that all of us, regardless of the account size, can play micros, can play options, can play minis. There should be nobody in this room that should not be able to play 2 micros. And if you're not there yet, continue to educate yourself. The market's not going anywhere, I promise. It'll still be here. It'll still be here when you've educated yourself and built up perhaps a larger grub stake. There's not anybody in this room who should not be able to afford 2 micros. Never trade single units. It's going to lead to bad habits. It's going to lead to an inability to scale in and scale out. So now what do I get to do? Well, we have an endearing, how many of you know the endearingly ladylike term that I use for second targets? After T1, first target, is so important. After it's reached, and we scale out and pay ourselves, what do? We pay ourselves while we can, not when we have to. We move the stop loss to break even. Very important as well. Why? You've heard the fortune cookie wisdom. Don't let a winner turn into a loser. Well, how do you do that? Well, after you've paid yourself to trade as a winner, we move to a break even. So all we're doing is risking unrealized profit. So pay ourselves when we can, not when we have to. Move the stop to break even. And I think the first mistake a lot of traders make is they immediately want a second target. We let the market move, get out of its way. Second targets are endearingly called greedy bastard targets in this room. All right. In other words, we shift into letting the market keep moving for us, and perhaps a 34,390 or maybe even a 34,420. We want it to be out there, because what happens to a lot of traders is that they put their first target way out in the stratosphere. They sit in an unrealized winner for a ridiculous amount of time. Sometimes the market fatigues. They never have paid themselves. They get stopped at a loss. That's just a bozo no-no. We want to have a prudently placed first target and then a very ambitious second target. Okay? Ambitious second target. And what happens is a lot of traders, once they've paid themselves, they're it's a great dopamine hit. We just pull money out of thin air. I don't know. It's an incredible feeling to this day. Thousands and thousands of trades later, I feel still like David Copperfield pulling money out of thin air. And you know what the first thing we want to do? We want to do it again, right? Because that dopamine hit of paying ourselves is so good. You have to fight that. You have to fight that. So I'm going to just let this market move a little bit. Now, second target considerations. For YM. And this applies to DIA and micro too. Maybe 34,390. I'm even thinking maybe 34,420. But that's what I'm thinking. Now, some of you might say, well, Rag, I don't want this is a great trade for me now. I want to protect those 30 points. Okay. What I would then do is start to trail a stop. So you can trail a stop. I'm not a big fan of going to a trailing until after the second target. But if you want to be a little bit more ambitious about that and you don't want to give up all of your unrealized profit, but you are setting yourself up to possibly getting stopped out. So if your goal really is to prefer to be stopped out, then see a second profit target. Some traders get very upset when they give back a large amount of unrealized profit. And there's nothing wrong with that, but there is a trade-off. So what you want to remember is that there is an expected price movement range. And I'm going to show you what that looks like. So you can ask yourself, what does this market typically do? Right? What does this market typically do? And how do I place orders respecting that? I would not get any closer than this actually reads 34,266. I would not get any closer than that. That's the 15-minute expected price movement range. Volatility study. If you want to give it a little bit more latitude, 34,246. 34,246. What that would allow you to do, by the way, by using a 34 by the way, do either one of those work for us? No, because they would be losing trades, right? So you can't trail below 310. Do you see the problem? I cannot trail below 310. So what's my next choice? All right. Typical price movement range. See, this is the problem when we move to trailing too fast. You're going to find you're probably smothering the trade. Can I give the market the latitude of 180 points? Nope, I can't even do that. So my advice is you have to be comfortable risking a certain amount of unrealized profit, not your capital anymore, but unrealized profit until second target. Once we hit 390, maybe then move it to 345. So this is where the idea of not wanting to risk unrealized profit and letting the market move in your favor is really important. It's really important. Another thing you can do is perhaps move the trailing stop, if you must, to just below the breach. So whatever your breach high was, maybe put it about 3 to 5 points below the breach. That's another thing you can do, because that would still represent locking in a certain degree of unrealized profit. So there's some choices there. Okay. A couple of the things that I like to see is that we're printing mostly green grab candles. I'd like to see the structure of the market in a double green. NASDAQ and S&P are far better about that right now. And someone mentioned the VIX was weak. Yes, the VIX weakness is also going to be helpful. Not necessary, but certainly helpful. The other thing that I'm going to make note of is, well, what are the sectors within the Dow doing? And why is the Dow lagging? Probably look no further than Industrials, they're kind of wishy-washy today. Transports are doing okay. Healthcare, wishy-washy. Financials, again, notice that the main components of what would allow the Dow to move higher, they're not terribly weak. They're just not as strong as tech. XLK, XLC is in fuego, and XLY. Why is the NASDAQ so much stronger? Because the pieces of it are stronger than the pieces of the Dow. Which is why if you can start to remember, if you can start to accept that you are a stock trader when you're trading indices, and then you just accept that and just dive right in and look at the tip of the iceberg, but stick your head in the water and see what else is waiting below it. All that girth of that iceberg are individual stocks and sectors. And then this now gives you the latitude to find where the outperforming parts of the market are. And they may not be at the broader index level. So one of the things that I like to do while I'm trading the indices is I like to look at the ETFs as well. Why? For two reasons. You're already trading them, whether you know it or not, whether you actually have exposure to an individual ETF or stock or not, you're already trading them because they're in this batter that's the Dow and the NAS and the S&P. So why not just go ahead and say accept it and then take your relative outperformance scanning to the next level? It's all connected. It is all very connected. We're just talking the difference between futures and stocks and options, really, the futures and stock options. Okay, so let's see. I have YM exposure. I have still quite a few DIA. And I would have loved to have gotten some SPY or NAS, but I do want to mention this really quickly. And this is probably going to resonate with some of you that are already following the swing trades that we talk about in the premium video and or are in the Sector Secrets Mastery. Okay. Now, the reason that it's so important to have a multi-time frame approach to your trading is because if you already have exposure to certain narratives, broader narratives, certain stocks, you're not going to sweat having to put some skin in the game at the day trading index level. So, for example, I have exposure to healthcare, but I'm going to slide the intraday chart over, the 5-minute chart over. This gapped up nicely. Do I have exposure to the S&P? Of course, via XLV. We've been long financials for a really long time. I already have exposure to the S&P. So this movement in the S&P this morning is already being reflected in a long position that I already have based upon a swing trade in the XLF and the XLV. All right, well, what else do I have? I have XLP, which is in fuego this morning. Again, I already have exposure to XLP. I already have exposure to a number of stock trades. I have exposure to copper. May not look sexy, but it is a nice long position. So when you have exposure across multiple time frames, you're able to have a much better, well-rounded approach to everything else you do because you don't feel that if you're not in the intraday trade right now, you're somehow missing out. So the FOMO, the cure for FOMO is often as simple as embrace multiple time frames. So clearly the first issue that comes up is, well, that's fine, Rog, but I don't want to be long the Dow in a longer term time frame. Well, for a lot of you, I don't recommend that at all. For most of you, I don't recommend that at all. What I'll say is if you want to be long XLV and XLF, what am I going to tell you to do? Buy options. Even when it comes to swing trading the Dow, buy options. Buy options on the futures contract or buy options on the ETF alternative. This is a $9,900 initial margin requirement. That's usually going to be cost prohibitive for most traders to take on multiple contracts. You're going to need almost $20,000 to trade just two. Well, of course, you could trade the micro and you could trade multiples of the micro. 5 micros is half a mini. Pretty nice. Half the margin requirement, half the price movement risk, half the reward too, in terms of position size. But position size is a really easy way to reduce risk, as is moving from futures to the ETF alternative option. So the easiest way for me to be as selective as I like to be, and the reason I can sit back and say I don't feel like I'm missing anything on the S&P and the NASDAQ, is because indirectly I've got exposure. All right, I've got exposure to the trade. So I think when you start to look at the market like that, you won't feel the need to overtrade as a day trader, because it's not all you do. You haven't reduced yourself to this one type of trading on a very short-term time frame. All right. And if you're looking for the auto chartist, it's chartviper.com/simpler trading. That'll get you to the special deal that I have for you all. It's half the price of their normal subscription. I believe it still is. It's $145 a year. I don't feel in any way that that's a really cost prohibitive amount. It's not going to prevent you from putting, more capital in your account in terms of, this is $145 a month. That'd be a whole different story. But I'll tell you what, even if it were $145 a month, I would still be fine with that. It just happens to be $145 a year, which is really, really reasonable for what it's the information it's giving you. So it's chartviper.com/simpler trading, and you don't have to be a member. You don't have to be a member of Simpler. Okay. All right. So I'm just, look, whether you're a member or not, I would love for you guys to benefit from this kind of analysis. I mean, a lot of the work that I've done with volatility comes from this. Really, no one else is doing this kind of work. And I would love for you guys to be able to benefit from it. And clearly, if you're in the room with us, if you're a member, then, there's a bunch of other things that I teach you to do with it, as well as the automated HPMR tool that I share with the members, which is these levels. Okay. Okay, let's do this here real quick. Just bear with me. So I was speaking earlier about exposure. So one thing that it's not been, this trade is not blazing any trails anywhere, but it's been okay. We've had, let's see. I don't know how many of you are still in it, but we had a long in Starbucks for a while. Some of you may still be in it. Some of you may not. The conservative trigger was way down at 111.60. Went all the way down, unfortunately, to I think 109, maybe 108.80, that area. But again, if you're able to sit through the trough because you haven't overpositioned and you have a certain amount of flexibility in the risk, then clearly that's a position. But I don't love that position because I don't love the XLY. For those of you that are wondering, what about XLY on the daily? Nah, thanks, but no thanks. Thanks, but no thanks. All right. Okay, so let's see here. So we have directional bias, bullish on everything. And it's 10:37. And I know it sounds a little early to say this, but I'm pretty much starting to wind down for the morning. Have a nice little boring trade in the YM. Would have loved to have had something that I could have done more ambitiously in the NQ and the ES, but that's okay. Sometimes this is just the way that it sets up. The idea that you're going to catch every single market. Now, look, in the case of the NQ, I know that part of your brain saying, gosh, I could have bought anywhere and the market could have gone up. That's true. That's true. But that will nearly almost always get you stopped out when the markets pull back. So the attitude of gosh, I'll just buy a higher high and take advantage of this move. Nobody knew the markets were going to be doing this. Nobody knew the markets were going to be setting, moving higher like this. So the danger in buying a higher high, assuming that it will keep going, is that if and when the markets do pull back, which they do very often, will you be able to sit through that? If you can, and even better, have more capital to buy on a pullback as well as the breakout, as well as the momentum, then you're balancing both those styles very, very nicely. But if you are going to get stuffed out on the pullback, here's one thought. Put a small position at the momentums and put larger positions at the pullbacks. And you're reducing your cost basis in such a way that you can sit through usually the inevitable pullbacks we will typically see. Today in the NASDAQ and the S&P just happened to be one of those days where you could have bought at any spot. And then, hindsight being 2020, clearly it continued to move higher. But nobody knows where the market's going to go. And even less, we don't know what the market's going to do as it gets there. So unless you can sit through a pullback, don't buy the higher highs as a general rule. Okay, don't buy the higher highs as a general rule. And in a double green environment, please don't go picking a top and shorting this unless you have some deep-rooted hatred for your money. Okay, please don't go about picking a top. Well, if I can't get, it's the ultimate revenge trade, by the way. If you're already long, are you thinking about shorting this market, or you're just thinking about trailing a stop and riding it higher? Of course, that's what you're doing. But the folks who are not already long, what happens inevitably is they start taking a contrarian attitude, which is really just revenge trading. Okay, on financial media, those perma bears, those naysayers of the market who don't have any kind of real data to back it up, they're just not long. Like, oh, got it. You hate this market because you don't have a long position. Check. And then they like to wrap themselves up in the wonderful pseudo-intellectual cloak of being contrarians, right? So let's not go there either. Let's see. What else do we have here? You know what? I'm going to go top off my water because I've already gone through my giant mug of water and I need more coffee right now that I need a hole in the head. So just bear with me. Give me about a minute. I'm going to go top off my water. If you guys have done the same, hydrate. It's good for the brain. Let's go have a quick water break. I'm going to go top my water off. And what is it? 9:40. Yeah, we'll be back in just 60 seconds. Okay. All right, gang. Thanks for that. Appreciate that. Okay, so let us do this. Let's do, all right, let's take some questions here. So, I just got my Dow trade in. I'm just going to get out of the way. Just leave it alone. Let it work for me. And I've got my, let me show you something here, gang. And I don't want to take us necessarily off the track of day trading, but I also want to encourage everybody to understand that the tack that I take on day trading is very much influenced by the fact that I've got a set of swing trades. Again, daily time frame, trend following trades that I'm defining what I believe swing trading is. This is what I do. I think the word swing trading has lost a lot of meaning. It's taken on some ridiculous type definitions like a trade lasting 3 to 5 days and other such really useless definitions. So I'm going to tell you what I think a swing trade is. The word swing and swing trade for me is basically synonymous with pullbacks or retracements. Pullbacks and retracements, I think, are most applicable, useful, and valid in the context of a trend. If you can understand what I just said there, or at least humor me in that definition, it will put you leaps and bounds ahead of most trend followers. Swings, again, are synonymous with retracements or pullbacks. Retracements and pullbacks are most valid and effective in a trending market. So in other words, swing trading is trend following. Trend following trading. When you read about people who are super, they go, for example, I was just watching Moneyball over the weekend while I was doing some chart work. I like to have a movie that I've seen 1,000 times. So I'm not too wrapped up in it, but I enjoy it in the background. Right? If you look at, say, if you watch Moneyball, at the very end, the meeting with John Henry, Now, John Henry's worth roughly, I don't know, about $3 billion. Bought the Red Sox, bought the guy behind Sabermetrics. The rest is history. Hired Theo Epstein, who also embraced that Sabermetrics and broke the curse of the Bambino, right? You guys know. I'm a huge Red Sox fan. So, and by the way, a lot of people don't know, not only does he own the Red Sox, he owns Liverpool Football Club. So he owns Liverpool FC. That's a heck of a franchise right there too. Anyway, how the heck did he make his money? John Henry and Company. He's a trader, right? He had a mechanical, he was more of a systems guy, but he had a mechanical, that means not a lot of discretion. And he used to make, he was actually known for reversals in markets. It's actually kind of interesting. I don't know that most people would consider him a trend follower, but he used the trend. So what I'm trying to encourage you guys to do, even if you don't want to buy Liverpool FC or the Boston Red Sox, use the trend in whatever way you want, but using it means you have to find it, recognize it. Okay. That being said, one of the long positions that I have, why have I kept this EWG here? Because US stonks aren't the only place that we can take advantage of these narratives. Lengthen the time frame. Be open to day trading EWG. Do I care if I'm trading DIA, SPY, QQQ, XLK, EWG, EWU? Not one bit. So we have a nice long position in EWG. Now, if you guys know anything about me, you're going to say, wait a minute, Rog. All right, double red, pull back, nice trade. Yeah, and I'm going to do what? I'm going to get out of its way and let it keep working for us. So EWG is a very nice trade for my longer term swing approach. So when you have these kinds of trades working for you, this was not an expensive trade. How many of you are in this EWG? I know I have quite a bit of overlap in the stream between new folks that are new to me and probably some of the Sector Secrets folks. So just so people get a feel for the trade, because I want them to hear it from you guys, because who cares if I'm making money? The point is, are you guys able to take my ideas and make money yourself? So just for the benefit of the group, tell me what you guys paid for this EWG. This EWG trade. It was insanely inexpensive. So just to give you guys an idea of what EWG costs most of us, it was right around $1. That means $1 or 100 US dollars. That's what it cost. Do you think you could scale into a few of those? Do you think you'll be able to sleep at night with maybe 4 or 5 of those as an open trade? This is what I mean about it's really nice to be able to embrace stock trading across the board. Did I lose anybody on that? Is this futures trading? I'm trading the DAX. Why not? If I'm willing to trade a Dow, why not trade the DAX too? So these for me were filled at the conservative level at $1.10. And I'll tell you this, some of the traders in Sector Secrets and even some of the traders in the futures who watch my analysis of these country ETFs, because to me, this is all futures trading. Some of you got even less than 90-cent fills. And I love when you guys get better fills than me. Tickles me to no end. So then the logical question is, all right, Rob, well, where is that trading right now? Well, you guys take a look. We're trading the 16 expiry, 33.75 strike. Is it the sexiest thing in the world? No, but it's already for some traders nearly tripled, and for almost everybody else easily doubled. That's it. Pretty simple, no? So do I mind a low-cost option? Not at all. I'll scoop up these at about $1, $1.10 all day long. And then now I think they're trading around $2.30, $2.40. A lot of people forget that you can scale into this type of trade, make a 2x. And so while it may not be as sexy as a $25 trade going to $35, your ROI is far better here. Your cost is far better here. Your risk is far better here, right? I hope you guys can see there's a connective thread between being a futures trader and having the ability to trade multiple types of markets. And then if you understand what swing trading is, he bought Liverpool FC. I'm a little bit more a Man City fan, but you know, we won't go there. So ultimately, what I want you all to look at are things like EWG and EWU with the same type of interest and the same ability to access it as you would DIA or anything else. Okay. All right. Let's see. Atrium Lift, you got 80 cents on that? Yahtzee. Nice, Phil. Nice. Like I said, I thought some folks had just under 90, 80 cents. Oh, you're killing it. That's a 3x for you right there. Nicely done. Nicely done. I love when you guys get even a better bid than me. Oh, excellent. And I imagine looking at, I'm looking at the 33.75s, and the most open interest is sitting there right now. Are we pretty much most of that 2,700 in open interest? As this thing goes higher, believe me, everyone's going to want to get what we've got. They will gladly take it off our hands. Very nice. I have a sneaking suspicion that we're probably most of that volume. All right. The sector army at work. I like it. I like it a lot. Okay. Questions. Somebody asked about where I anchor the V-score. Intraday, 7 a.m. 7 a.m. I'm looking for volume profile from 9:30 forward, but I'm looking for the V profile from V score from 7 a.m. All right, let's see. Most of the indicators at the bottom of my chart, not all of them, but most of the indicators that you guys see on my screen, I make available free to members, HPMRs, Propulsion, Darvis, Wave, Grab, the trade flags, as well as the color-coded JT Multi. So I make a ridiculous amount of my tools free to members. And I have a handful of tools that are premium, V-Profile and VWAP, not because I created those, but because to find an anchored V-Profile and VWAP just are not built into most platforms. They should be, they're just not. But the main reason for the premium tool is the tool that I did create, which is known as the V-Score at the bottom of the screen. So that's the only premium tool that I use, that I have, and everything else I make available free to members. All right. So you can check that out in the Simpler Trading Store. However, let me give you guys a not so secret secret. Starting sometime in June, we're going to have a couple webinars. And if you're already following me over at Countdown Trader, we'll make sure you guys know when this is happening. But my next class, which is right almost exactly a month away, on the 26th of June, is going to be a day trading class. And Trish, my right hand here in the office, has already seen to making sure that the premium tool, that VWAP Max, is going to be included as it often is with some of my classes. So that will be included. So if you want to take the class and you want the tool, you'll just get a better deal. So I'm just telling you guys, if you want, just hold out, wait for the class, and you can get both at a far better price. And that'll be June 26, I believe. Whatever that Saturday is towards the end of June. June 26? It sounds about right. Yeah, June 26. Okay. All right. Dark Pool Algo, that's your birthday? Oh, very nice. My husband's a June baby as well. Very cool. Does that, let's see, he's a Gemini. What does that make you? He's a real Gemini. I don't know anything about that stuff. I just know he's okay, makes you a Cancer? Okay. All right, Trish is reminding me. Yep, it's the 26th. Okay, and then by the time we get that class, Lauren and I should be done sort of running all the road tests on the updated. It's not a new V-score, it's an updated V-score, bells and whistles. If you guys have the base model, it's still the same base model. Instead of manual crank up windows, we're going to electric. We got some bells and whistles coming with the next iteration of the V-score, and the new V-score will be in that package. And if you've got the old V-score, we update that as well. So that will be included. The new V-score is not available yet. We're still, like I said, we're still road testing it. I think we're making some updates to the Waikiki FMB clearing range tool too. I think we're making some updates to that. So just some updates. So the updates will be available probably sometime just before the class. Figure sometime after mid-June. All right. So keep an eye out for that. All right. Let's see. Where are we? So if you were interested in the 34,395 second target, we hit that at 10:53. Again, we hit that 3 minutes ago. So if you were interested in this 395 here, you got it. If you were, I'm thinking we could even see 420, but remember, we're probably not going to take out 34.4 on the first swing. All right, we are very unlikely to take that out the first attempt. It's like trying to run through a wall. It might take a few shots. Okay. What else we have here question-wise? Yeah, I love having some runners on. Yes, gang, I love having some runners on. I agree. But I think it's imperative that we take at least half, third to half. I usually go with half the position off at the first target, and then that allows us a quarter. So how many targets could I conceivably go? First target is half the position. Second target is a quarter, right? Or half of what's left. And then that last bit, the final quarter, I can put a trailing stop on and just let the market go, having done my primary job, which is paying myself. So the idea that we're going to be fully positioned throughout the life of a trend or a life of a move is really just a fairy tale. Nobody's going to buy the bottom and sell the top. We'll pay ourselves while we can, not when we have to, and we'll scale out in such a way that if the market keeps going, we at least still have some skin in the game. And this is why it's so important that when I talk about the inexpensive route into these markets, there's no way you can do this with one contract. 2, not too bad. 3, better. But, having multiple contracts. And when we talk about 90-cent, $1.20, $2.50 type options, or even the micros, it's doable. So if you cannot trade multiple minis, try the options, try the micros. Okay, try the options, try the micros. All right, next up is, let's see, Donald asks, RH, oh, how do I like Phil winning the P? I'll tell you what, Phil has found the gym. Has he not? Phil just turned 50, I believe. Yeah, Phil Mickelson. Yeah, that was pretty cool. He's a heck of, I mean, look, people have said for his talent, if you watch any of that Tiger Woods documentary, I mean, their rivalry goes back to when they were in college. Phil was the one with so much talent, and clearly Tiger Woods was the one with just an inhuman, unbelievable drive. But yeah, I mean, he's almost 51. I thought that was amazing, but he has definitely found the gym. Yeah, I thought that was great. He'll be 51 in 3 weeks. I know he's 50. I think he'll be 51 in 3 weeks. Oh, very cool. There was a couple, I think he was grouped up with Cupkey, right? I mean, Brooks Cupkey is a fit golfer, right? And Phil looked pretty darn good next to him. Yeah, I'm very happy for him. I don't know what happened to Cupkey on those par 5s. Yeah, I don't know if it's just the pressure or what, but yeah. And he's a heck of a golfer too. He'll be back. Yeah, championship experience, right? It does make a difference. Although Cupkey's won a lot, but yeah. It was just strange. Every time he was in a par 5, it was nuts. Anyway, I won't geek out on golf with you guys. So moving on. Yeah, Twitchy, I like Lefty too. I do. He's got one of the prettiest strokes. He really does. Okay. So yeah, Donald, I think it was awesome. I think it was just a great weekend of golf, period. Where do we get the new V-Score Trade-MO? Mid-June, just keep your eyes open. We'll definitely, you guys get lots of emails from Simpler. Trust me. We'll be sure to let you guys know. All right. Next question is, I think that covers all the indicator questions as far as where they're anchored and so forth. I mean, I'm winding down for the day. If you haven't realized, when I start talking Red Sox and PGA Open, yeah, I'm winding down for the day. Doesn't mean that I'm going to close my trades out, but I'm not going to persist in actively doing a lot. Remember, we do not have a dramatic European close because they're already on bank holiday. They're already on bank holiday. All right. Let's see what else we have here. Let's see. Kevin said he lost a lot of weight. I'll tell you what, most people went into 2020 putting on some sort of, yeah, not him. Not him. I think he launched a company too, which was pretty smart. All right. 009. Yeah, if you're waiting for a V-Score bundle sale, it does go on sale, but then it's also included with a bunch of my classes too. And then also notice, I mean, I'm using these same things when I'm trading some of these ETFs, which is just really just open it up a lot. So 395, 420, I mean, somewhere in there, I would say most of you could find a really good T2 on that open Dow trade. Like I said, I'm disappointed on one hand that we didn't get even a shot at a pullback in the NQ and ES, but I'm not going to chase. Remember, a day trader's best friend is the next session. All that means is that I'm not going to force a trade. And unless I can get some sort of pullback, there's not much I can do. Now, having said that, let me at least do this. Just bear with me a sec. Oops, that's not what I wanted to do. Just bear with me a sec here. So you need a feed if you want to use TradingView. But like I said, there's so many companies that do have the login capability, like TradeStation, into TradingView. There's a lot of ways you can look at volume profile. So if you are looking at different types of momentum trades, yeah, part of that's going to be making sure you're noting where those volume ledges are. And it's the same thing I do in a daily time frame. This isn't just limit. I mean, look at where we're stuck right now. Point of control, volume ledge. The market isn't falling from there, but it's having a hard time getting through the ledge. That's the NQ. So there are two tools that I like. You'll see that I'll kind of go between two volume tools. I forgot where I got this one. I cannot remember, but I do like this one a lot too. And so as you take out different levels of volume, think of it. This is called the Alex Henold school of using volume. I do this on the end of day chart. I do this on the intraday chart. And what this is you guys saw Alex Henold's Scale El Capitan Free Solo, really good documentary. If you don't like heights, well, maybe not for you. I don't like heights. I still found him unbelievable. Think about Alex climbing this, right? And the route he'd have to take. Every one of these places are a place that he can grab with his hands, his feet, right? Push on to the next ledge. Well, price action is like Alex when it comes to volume. Find those little ledges where you can get some sort of foothold or hand grip in, and that's how you scale it. But then if you have a significant ledge, one that juts out a little further, you're going to have issues with getting above those levels. So levels like this are both an asset, but they're also potentially an obstacle. And that's just how volume works. And I'll have to remember which tool this was, because I like this and use this one quite a bit. I'll just usually have it on a different screen, but I do like it quite a bit. But again, look, if I have a pullback level that I'm interested in, we do this with the daily end of day charts. I'd love for the market to get down to, this level here and then move higher. So it's a nice foothold. Okay. All right. So momentum trading is really going to need volume. But then again, swing trading, finding those pullbacks and having those pullbacks correspond with volume support. I mean, those are either in sector secrets or even when we do swing trading in the premium video in the futures room, that I love saying, hey, seeing that there's a volume ledge. Take a look. If we get a pullback in copper, yeah, I could start my aggro buys here, but if I get this level right here, bang, I would love that. Take a look at the bottom line of the wave, lining up once again with a volume ledge. That's fantastic. So we may not get down there, but if we do, I'm definitely interested. Where is copper going to have resistance moving higher? Right here. Volume ledge. So think about Alex climbing and what he can use and what's going to be in his way. What about RBOB? It looks like if we can get past this level here, we've got a pretty unhindered move to new highs. If we move lower, I'll look for that area to hold it. So it doesn't matter the time frame, and it doesn't have to be complicated. Do you need me to point these out? No, it's just good old that white line there is a point of control. So as much as I think volume is really powerful, this isn't secretive stuff that only ninjas can find. No, it's just making sure you're embracing different look backs to find out, given a different amount of time, where the price, the point of control, where the price and the volume intersect for those levels that are not easily found with a support and resistance level, with a horizontal line or with a trend line, right? These are far more important than either one of those, quite frankly. What about something like, corn? Corn's in a tricky spot. I don't have a lot of volume sitting in this area. And if corn were to slip, see, this is where you need to think about, if corn were to slip, whoosh, I probably wouldn't even get support till down around here, probably corresponding with this VWAP. So there's a danger that if corn slips, that first step's going to be a Lulu, whoosh, just like that. That doesn't mean that we're going to do it, but it means if we were to stumble a little bit, it could, you don't want to argue with your stop loss. Ditto soybeans. Now, soybeans at least have a little bit of this helping with that, unlike corn. But if we were to lose that, slip through the 55, we're probably at 14.15 before we can even know what happened. Whoosh, right? That's what that helps with. Oh gosh, what about something like the daily chart of the NAS? Where is the NAS right now on the daily? It might look like there's an inordinate amount of action happening here, but the thing that you want to notice are the ledges. The ledges, that's the point of control. That's your ledge. The NAS standing atop of that's going to be a big deal. A little bit of problem here, a little bit of problem there. On the way to the new highs, perhaps. What about the Dow, which is the market that I like the best, not just intraday, but end of day? It is tremendous that we were able to take out this. Look at how many candles are gathered in this area. Getting above this, it may not look like much. I think that's a really big deal. And I've got long positions in XLI, got long positions in IYT, got a long position in the DIA. So that volume ledge, that's very good for us. I think as far as I'm concerned, barring any major news about the stimulus package, barring any major news about, well, anything that can come out of nowhere, political or geopolitical, I think we're pretty much on a course for 34,950 on the YM. Okay. Yeah, you guys. So just in case for the few of you that don't know who I'm talking about when I talk about Alex Henold, he's got a really good book too. It's a very good book. Aside from Free Solo, this kid is. I don't know what wires a guy to be able to do this, but it's really, really good. But if you haven't ever seen it, definitely watch it. It's actually a really cool movie. But yeah, that's the cover. Oh gosh, that's the cover. Oh yeah, look at that. Oh my gosh. Oh my gosh. 3,000 feet without a rope. The horror and the beauty of Free Solo. Oh, that's really well put. But that's what we're talking about. That's volume. It's Alex. What else do we have here, gang? Just kind of scrolling through some of the questions. And again, if you're thinking about swing or momentum trading, volume is going to make a difference. Volume is submarket sonar. So you're wondering, how does volume factor in? Well, many of you already know, because that's what submarket sonar was all about. So if you look at a iceberg, these are as beautiful as they are scary looking. You've seen all these before, I'm sure. What we see And I don't know that these are real, some of these shots, but this one's a neat one. That very popular image to sort of to scale what we can see, right? What we can see versus what we can't. And for me, down in here, this is where the great day trading begins. This is price. This is price up in here, which is great, but it's what's above the surface. Trish called the class sub-market sonar because let's get down underneath this. And this is time, and this is volume, and this is volatility, the things that most people don't necessarily look at. And it's really, I believe, the main mover. Price plus volume, even if you just understood price plus volume, you're going to be so much further ahead than most investors and traders. Price plus volume plus time, holy cow. Now you're really putting some distance between you and the rest of the pack. And then you add volatility to that, it's inevitable that you're going to be doing this at an elite level because you just know more things about what moves the market. I like that image a lot. That's a great image. I like the way they scaled it. I love the way they scaled it. I need to keep that image. That's a great image. All right. If you're a new trader, everything that I do starts with trend, and everything that I measure the trend with is pretty much wave, grab, propulsion, the JT multi-trend, the moving averages. So I would start at trend recognition. Like I mentioned, whether you're John Henry and you take advantage of fatigue in the trend or whatever you like to do with the trend, most great trading, whether it's, downtrend, uptrend, counter trend, if you can recognize the trend, you're already going to be way ahead of most traders. Most of what you want to do is recognize the trend. I think it works better longer term, but I think almost anything works better if you give it time. I remember I think there's a quote where Jeff Bezos asks Warren Buffett, if your style of investing is just so good and it's done clearly very well for you, how come everybody doesn't do it? And Warren Buffett said probably the most Buffett thing ever. He goes, because nobody wants to get rich slowly. Boom, right? We hear too many stories about crypto and GameStop and all this other nonsense. And all of a sudden, nobody wants to, build a fortune in a very methodical, sometimes time. I don't know that I love Warren Buffett's glacial pace of things. And I don't know that if given this market now that he'd be able to build Berkshire Hathaway than he did then. But nonetheless, some things just take time. So I'm not going to wait decades, but I don't mind waiting 5 days to 5 weeks. I mean, the EWG trade is a great example of that. If you ask, well, Rog, how long have you been in EWG? We've been buying this since the 30th of April. We've been setting this up, I should say, since the 30th of April. So, a month, but look at the move. Dollar options. So I don't mind weeks. I don't know about months. I'm not as patient as Buffett. But time does help. Time does help. Okay, next up is, I've been getting questions, people asking me what's the difference in the day trading approach. It's the year, gang. It's what I'm doing in 2021. What worked in 2020, was darn near everything. What's working in 2021 is distinctly different. Is it rooted in the same stuff? Everything I do is going to be rooted in the same things that I've been teaching traders, even before Simpler. I've been teaching traders the same thing for 25, 30 years. I was sharing with some of the Simpler Futures folks articles that I'd written for websites back in the 90s and early 2000s. And they're pretty much telling folks the same thing. And that was 20, 21, 22 years ago. Had the wave on my chart, all that stuff. And so I probably embraced momentum trading a little bit differently back then because 20 years ago, you could play momentum. It's very different now. I do think there are some behaviors in the market that are different now than they were then, mainly because of things like, I think algos have affected the way in which momentum works. Even momentum setups like a Dow 123 stopped working as well as they did in the 80s and early 90s going into late 90s, 2000. So it's just a matter of the market, other participants in the market capitalizing on really common levels and common approaches and just being on the other side of the trade and creating a lot of false breakouts and such. It just modifies what we do. It doesn't recreate it. So it's really understand that 2021 is a completely different animal. We can take a lot of the tools that we have, but we have to use them a little bit differently. Yeah, and partly the reason for it is that everything that was working in 2021, I think a lot of traders are realizing if 2021 and 2020 were the same, well, everybody would still be throwing parties and confetti would be falling out of the ceiling. And I think a lot of folks know, no, there's some different aspects to this and how do we adapt and learn how to trade in an environment like this. That's really the gist of it. Watch list building, relative outperformance, that stuff didn't matter as much. When you have a buy everything market, like the illusion that was 2020, it's amazing. You're not going to become a better trader through 2020. Very, very little is to be gained from markets like last year. A lot of profits, and I'm so pleased about that, but very little knowledge and education and lessons are to be gained. And now people are realizing, oh, yeah, I don't really know how to do what I need to do to trade a normal market. Traders, investors, this is a normal market. What we're getting right now, this is normal. And if you're saying, well, when we get another 2020 again, don't hold your breath. Learn to trade markets like this, and they're very tradable, and they're very in long-term and short-term. Not to brag, but we're kicking butt in sector secrets. So far, we're doing very well day trading with the 5 pitches in 2021 in the room. Are there losing days? Oh, gosh. Yeah, I mean, I like to show you guys my losers. I love to show you. Look at all the red. Look at all the red. Red, red, red. And you'll notice my reds usually come in clumps. Boom, boom. Oh, you look at that. That was the end of February, beginning of March. Okay. So I love showing the losers. This is a different market. Yeah, it's a very different market. But when you follow the process and you trust the process, this is also 2021 and it's not up to date. Okay. That's 2021. So yeah, you're going to have a different activity level. You have to be patient in a different way. And really, I think, be much more discerning about when you're looking at certain pitches as well. All right. Somebody asked me about UN. Oh, what was that from the sector? Hang on. Is that from the stream or the futures room? Are we getting V-Score and Trading View soon? Zion View? Yeah, by the time we get to the class, that's the plan. Yep. Gang, I'm pretty much out of stuff that I'm looking for. So I'm just going to go scan some longer term time frames and, just wrapping up my day trades. That's it. And by the way, if you're wondering what my pace of day trading is, I really want you all to know, because if you're looking for a super active day trading style, I am not your mentor. And that's okay. I would ask, why do you want a super active day trading style? But if you do, I am going to bore you to tears. If I can get 1 to 2 trades off in each one of the symbols that I look for, I am tickled pink. Most of the time, of the 6 to 7 markets that I'm looking at, I might get 2 or 3 trades. So when we start going a little bit more detailed into my 2021 activity, you're going to see just how infrequently I trade. But it's not about trade frequency. It's about risk rewards. It's about proper trade sizing. It's about proper trade selection. It's not just trading like, well, what's another way to put it? No, I'm just going to say it. It's not like trading like a crackhead, which I find which is what most day traders do. Way too much activity. And activity does not mean profitability. Okay. DBA, sure. I still like DBA. Yeah, I still like DBA very much. This is going to be a look, as we talked about when we started looking at some of these reflation trades and ad trades that are a reflation trade. Remember, I said as long as tech is sort of the popular kid in class, we're going to see some of these corn trades, some of these reflation trades sort of lose a little bit of footing. But remember, as they're losing footing, they're going to trade down towards our moderate and conservative levels. And remember, I'm always, if not sort of hyper conscious about the cost of the options that I put you in. If you're looking at the July DBA and the strikes that we're looking at, realize these are not even $1. These are somewhere in the 70 to 80 cents. So do I mind scaling in, and do I mind a little bit of risk on options that are going to run me, I don't know, 75, 80 cents? So scale in appropriately. Realize that as long as the NASDAQ is still sort of, all fiery, not a trend, by the way, this is not an uptrend, but all sorts of fiery, you're going to see reflation struggle a little bit. And please remember that your tech traders, I, for the life of me, don't know why there's still a preoccupation about what FANG is doing when the Dow has been such a better trend, and there's so many other better trends in this market. But for every one of these we tend to also get a bunch of these. So day trade the NAS, terrific. But remember, this is still very much chop. Still very much chop. So getting consistent up days, we had a couple of them in May, and then the market got absolutely Donkey Kong for the next 4 sessions. Had a nice up day, took it all back over the next 3 sessions. I'm not saying that we're going to see this market take it all back, but I'm not going to be the least bit surprised. Please don't place an inordinate amount of your attention on FANG. Right now, it's just dumb unless you're going to day trade this. Day trade it for sure, but don't place a huge emphasis on follow through in some of these, unless the only exception are the heavily weighted stocks and the XLC, which has been the only exception that I've been encouraging in this room and in Sector Secrets, which is we have relative outperformers that just happen to be in the XLC, led by Facebook and led by Google. That's where you want to focus. Don't look widely at FANG. That's just dumb. Look specifically at the relative outperformers, the ones that are still maintaining a little bit of a trend. It ain't Amazon, right? It ain't Apple. Barely Microsoft. It's Facebook and Google. And that means you can then sort of focus on the XLC versus the broader. And that right there is not only the way in which you want to focus on your day trading, but the same way you want to focus on your swing trading too. Okay. Oh, I'm getting my alert for DBX to be buying that. All right. Well, there you go. I don't know why clearly it's an alert that I have not canceled. All right. Oh yeah, I do have a bunch of alerts on TradingView that I have not canceled. Whoops. By the way, I talk about placing alerts a lot. Well, there you go. I'm not kidding. I like to place a lot of alerts, and then sometimes I forget to cancel them. Well, luckily, it's very easy to clean up on TradingView. All right. So again, that's all I've got. So thank you for joining me for the live stream. I definitely encourage you guys to come follow what we're doing and join us at our community at Simpler Futures. And an easy way to get to that link is just type in simplerfutures.com, and you can check out our trial. All right. If you haven't already done that, if you've never checked out a trial before, definitely do. And you'll get access to all the traders over at Simpler Futures, not just myself. The premium videos that I record for you all, the Learning Center, the member webinar recordings, lots of education for this. So for those of you that have been asking, I quite don't understand what you're doing, or what's this tool, or where do we get it? A lot of the tools are available in the Room Drive for members, and a lot of the education is available in the dashboard that has our Learning Center and a whole bunch of other stuff. So if you're digging some of the swing trades I'm talking about, those are discussed in the premium video every single evening. So we've got a lot of great stuff going on there. I look forward to seeing you on the inside in the members area. come meet our community. Very supportive room. We don't have braggarts. We don't have jerks. We just don't. We have a very supportive room. Really great, supportive, experienced members that when you're still in your learning process, they'll help you out. So I'm really proud of the group that we have there. Go enjoy a few minutes break. My members, David will be here at the bottom of the hour. And my live stream folks, thanks as always for joining us. Jack will be here on Monday. So next Monday, don't miss Mr. Jack Roberts taking you all through the morning with his style. He's a big fan of the micros. Remember, we've got crude oil micros coming around the bend. We already have the Bitcoin micros. We have micros in currencies. We have, of course, the micros in the indices. So if you're intimidated by the cost of futures trading, remember that micro world access from the CME continues to expand. A lot of liquidity in popular micro. I think Bitcoin's already off to a great start and crude's right around the corner. The micro indices have been a huge hit. So you don't have to put in a lot of capital to learn how to trade this. And you can scale into this approach from any one of our traders at your pace. So you're not trading above where you should be from a risk standpoint. Thank you as always for your time. Gang, have a great one. I'll talk with you soon. Be good to each other.